Delano, great to have you back. I guess, some have pointed out we got CPI followed by several sessions now that we're in the midst of where there's very little macro. We'll get PPI and then the Fed. And that kind of left the bulls with nothing to hang their hat on.
Exactly, Carl. Thanks for having me back. No, you're exactly right. The report Friday is really what I think is triggering this kind of panic sell-off here we're seeing on Monday. And really, you're looking at investors that are looking to see if the Fed is going to be more aggressive than we initially thought. I have some thoughts contrarian on that, thinking that the Fed will stick to what's been communicated. But I think that's what's happening. And if you look at the 10 and 2 year, we're getting closer to that inversion. So that's obviously the market looking at, a more aggressive Fed as well. So investors are spooked right now. And I think we're seeing that all across the board, whether it's in tech stocks, whether it's in the crypto market. But you're seeing that that contrarian view coming to Carl.
Yeah, and then you got, of course, the impact on the dollar index near some 20-year highs. And now, Delano, there's a creeping conversation about the impact of Forex on earnings for the quarter. And so now you're going to have the street on watch for some negative pre-announcements with the bank earnings really just a couple weeks away.
Yeah, you're exactly right, Carl. I think one thing that's been kind of interesting to watch is what's going on with consumer sentiment. I think that was one area of the market that you can kind of hang your hat on, saying that consumers are still strong, savings rates still strong. But we did see the preliminary sentiment come out, and that index fell to the lowest on record. And I think that's affecting everything across the board. And you're seeing the bank earnings, or you're seeing the banks pull back as well. So there's really no place to hide in a market like this. But I do think, as we'll get to, what investors can do right now is that rotation. And I think panic selling will obviously prove to be the wrong move to make here, Carl.
Well, I want to talk about that rotation idea and start with crypto because I think it's a poster child for risk in this market, and the attitude toward risk has been so important. People keep talking about crypto winter, which I think implies that crypto spring is right around the corner. But what if we're looking at crypto climate change, right? What if this is just a wholesale shift in the way we're looking at risk? How are you going to be able to tell?
I think one thing you'll see is what happens with the large caps. I think you generally in this cycle, and obviously there's a down cycle in crypto winter, you see everything pull back, but the large caps obviously pull back less than some of those altcoins. And right now you're seeing everything pull back tremendously. And the projects that don't make it out of this, I think will be some of those altcoin projects that people were very heavily in, which were, as you mentioned, John, very risky. I'm still a believer in some of those our large cap tokens. Obviously you're talking about Bitcoin, Ethereum. They're going to have their down days. They're going to be in cycles as we're nearing the bull cycle. Obviously, we're well into the bear cycle. But, this is typical for crypto if you look past the history of over a decade of the crypto market. And I think, most people that have been holding, if you actually look at the holding percentages, they're actually higher for people that have been holding longer than a year to their cryptocurrency. So that is a sticking point here as well, John.
Yeah, although, Delano, we've never seen crypto operate in this kind of an interest rate environment. This time is different.
Yeah. Yep. And that's an environment that, investors have to take into effect is interest rates are going to still be rising. You're still having consumers. You're seeing a lot of liquidity be taken out of the market because a lot of leverage on some exchanges for retail consumers. That's a lot of what's happening. But I think people that are using their own capital, that are investing in the project that they believe in, are still holding on. And I think, if you were buying in October, November at above, 60,000, and you still believe in fundamentally what you're buying, there's no reason why you shouldn't be buying at 22,000.